Hey, this is Jeff Scott, and this is my weekend review for the week ending Sunday, May 7th. As you can see, it's 11:40 p.m. on the 6th, so we don't have French elections out yet, nor do we have futures. So I'll give you my thoughts prior to those events, which obviously could influence what the market does on Monday, and probably will. So I entitled today Another Leg Up, but I put a question mark. I listened to a lot of heads talking, and clearly the sentiment is that the market's going higher from here. And I think it's very possible that we're going to have a blow off top. Perhaps we're already seeing that in the NASDAQ. Just take a look at what's happened over the last couple of weeks. But all's not well in the market land, and I think there's some still remains concerns, and I'm in the camp that we melt up and then we fall. But remember what month we're in, so maybe it'll come in like a lamb and go out like a lion, or bull and bear. As always, this is for education purposes only, and recommendations are in the spirit of education, not investment advice. I'm a doctor, not a broker. I have no licenses as far as investment, brokerage, money management. So anything I recommend is and should be considered education only. I am truly independent. I paid for all my tools, and trading involves risks, and you and you alone are solely responsible for any investment decisions you make. And if I ever talk about options, which I do from time to time, keep in mind that the government authorities, including the options exchange, want you to know that they are risky, and you need to be familiar before you trade them. As always, I like to call out my influences. This is going to be a very long one, I'm afraid, so I'm going to try and shorten it where I can. CanSlim is my beginnings, made electronic and improved, I believe, by Ian Woodward and his sidekick, Ron Brown. Morales and Catcher are O'Neill disciples. Brought us pocket pivots, powerful gap ups. Here's my buddy George Lee, just finished an online seminar that was excellent as always. John Person, someone who I've become quite fond of as a friend, but he's also a brilliant trader, mentor, has some great tools that I use in TradeStation and Thinkorswim. Here are a couple of his great books. The one on they're both excellent, and I highly recommend them. Van Tharp, Money Management, and I started mentioning over the last couple of weeks I've been spending some time with Guy Cohen. I've got to find his email. He gave me some better screenshots to put up there, but he's got a series of sites, and it's probably somewhere in between John and CanSlim for a degree of difficulty. It's not futures, so if you're a futures trader, it's not something you want to see. But he's got some really cool scanning tools, web-based, and a charting indicator called the OVI, which I use as a filter all the time before I take trades to make sure that I'm not looking at something that his OVI suggests the big money is going the other way. So I recently went to a live Options Easy program with him, and it was outstanding. So check it out. Just another thing on your list of things to do. I have a lot of programs and use a lot of additional websites. HGSI and EdgeRater are my key tools for after-market analysis. TradeStation, Thinkorswim are always on during the day when I'm not working. HighGrowthStock.com, again, I am independent. I get no commissions, but I like to support these guys. I've sort of been their unofficial online support, one of their online support person for a decade. I started these webinars to help new users learn how to use the program. And if you click under investing strategies, you'll see my name in a bunch of videos, same with Ron Brown. If you've never tried it out and you want some additional educational material about how to use the program, Ron's got some great things. And if you email me, I'll send you a little package that I put together that has, it's a little outdated, but it's got some videos of how to use the various tools. As I always like to point out again, the 30-day trial doesn't even require a credit card. Stock patterns are cyclical, and man, it's like we took this pattern and we just cut it into this little box here. And we run up, we think we're rolling over, and we run up again. We think we're rolling over, we run up again. I think we run up again. Eventually, we're going to stop running up, but I'll show you some things that I'll be watching closely that have me concerned that we may run up again, but I'm not convinced that this is a run up that's going to continue over the long run. I think that we may have some sell in May pain to come yet. Based upon where we are in the market, you have to position yourself. I'm probably too long right now considering the French elections this weekend. My son's in Germany, and he's convinced that the moderate's going to win and that Le Pen will lose, and that's the sentiment in Europe. We thought about that with Hillary Clinton and Brexit, and we know what happened. Fortunately, despite those two insults to the market, which the insult being that we got a surprise, and even though there was a short-term reaction, both the markets continue to go higher, so maybe this will be a short-term. When I'm going long, I'm playing on the left. When I'm going short, I'm playing on the right. And when I'm confused and think the market's sideways and there's uncertainty, I'm in the middle up here with cash, smaller positions, and selling premium. As I said, I'm positioned pretty long right now because I do think we're going higher, but maybe I'm too long, but we'll see. Part of why I'm long is that there's just broad market strength on Friday, and you could see materials were strong. Energy, despite oil dropping, energy actually turned up on the day. So I noticed on my review there are a number of energy stocks, including things like BP, that pay a big dividend that looked interesting. Financials continue weak, but if you think about what's going to happen with interest rates, maybe you'll see some improvement going forward. But I think right now that's going to be critical, because if the XLF doesn't participate, there's probably a limit to how far the S&P and the market will go. Industrial strong, technology mixed, semiconductors strong, and you can see staples, discretionary, retail, even retail picking up. What was weak was healthcare, and I think biotech, especially big biotech, I'll try to remember to show you some of the stocks I'm concerned about, is at a crossroads. Keep in mind that the biotech ETFs are heavily dominated by Celgene, Biogen, Gilead, Alexion, but they include a lot of little stocks. And even though I'm in that business, I find it easier sometimes to be in or out of biotech by playing LABU or LABD. And what I found is that I can get the move without as much as the news risk, because you don't always know when a data point's being presented. If you hear that whining, that's my dog, and I'm going to take a quick second and see what he wants. All right, let's continue on. Sorry for the brief interruption. Major markets. Look at the NASDAQ. So if you haven't been here before, I look at these intraday. These are daily charts. Upper left is E-minis, upper right's NASDAQ, upper center is NASDAQ, upper right is Dow. IWM, because TF's too much money, and the lower left, here's the VIX, here's the dollar. Which one looks the strongest? Clearly the NASDAQ is outperforming, the S&P is second, and the Dow futures are above their moving averages. But notice here's the 17 is about to cross over the 50 on both the E-minis and the YM. That's Golden Cross time. That's a bullish phenomenon. Clearly, they're all in person buy signals, and the NASDAQ's just been in a power move. IWM, this has been the weakest, but notice it stopped at the 50 and held 3 days in a row. I think it goes higher. The VIX is quite low, and the dollar is weakening. On the weekly, again, how do you be bearish with these top three things? And you can see we're in buy signals for all the major markets. A little bit messier here on the IWM. The VIX is pretty darn low, and the dollar is trying to hold support at the 50 weekly, a break behind there. And we'll see some strength in the euro, I'm certain. Daily, weekly, and monthly charts, again, just to give you more of a picture. And these are towers, column of E-minis, NASDAQ futures, Russell futures, NYSE, and Dow futures. And clearly, you see the strength here in the NASDAQ futures, but everything is moving up. Even the Russell futures reversed a little bit on Thursday and Friday. They are still in a daily sell signal, interestingly, on Genesis. Everything else is in a buy signal. On the weekly, everything is in a buy signal. And on the monthly, I think I don't know what that is. I may have messed up here. That's not sure what that is. But you could see markets are strong. Rates stabilized. The fact that the rates, both the 10-year and the 30-year, moved up a little bit, to me is just a sign of more confidence in the market. And I have little targets here. I've found over the years that if the 10 years are between 2.5% and 3%, the market's pretty happy. When it gets above 3%, then we start to worry that it could slow down the economy. And I put about 3.2 on the 30-year bond for the same line in the sand. When we're below that 2%, I worry that people think there's some weakness in the economy. So I'd like to see us get above that 2.5 or so. But we did move up a little bit on both the 10 and 30 years this week. AD lines, boy, on the left, the small stocks, and on the right, the large caps, and they're both setting new highs. So we've got on the NYSE specifically, large and small stocks, as well as on the Russell, are setting new highs on the AD line, showing broadening and strength in the market. When I looked at number of stocks above the 200-day on the left and the 40-day moving average on the right, both of which actually eased a little bit this week, but as I look closely, they're really stayed about the same. So the beauty about this is we're not at the top of the range, so we're not overbought. 3-month new high, new low, well, that one is getting near overbought territory, but you could see the rapid swings and how many swings we've had over the last several years. It's a very short-term indicator. When it gets up near this white line, the market usually pauses. We moved up quite a bit this week, but we're not up at the top, so still can go higher. The daily McClellan, it's interesting. We had a lower low here. We're back to the midline on the daily, a lower low on the summation index. So both the oscillator and summation index more in sync perhaps with the S&P 500, and the same thing on the weekly, where we're continuing to we haven't gotten higher highs, but we've had higher lows on the summation index, and we're right around the flat line on the oscillator. So a little bit less divergence, if not neutralization of the divergence than we saw before. Again, consistent with more participation in this market. The buckets, 2/3 of the stocks are trading in the S&P 1500 are trading above the midline in their Bollinger Bands. That's good, and it's certainly not an extreme. When you look at where the buckets are, we've got a few stocks above the bands and a few stocks below the bands. Certainly, this is not a extreme. Most of these things I'm doing, I'm looking for extremes that tell me the market's going to turn around, and it may get me to change how I allocate my funds and whether I want to be more defensive or not. Now, here's where I start to get a little concerned. Be aware the HINDY. For those who've been here before, know that I watch this like a hawk. And I watch it like a hawk because it saved my bacon in the past. A single spurious Hindenburg doesn't mean anything. But when you start to see bunches of them, you can be certain the market's about to correct heavy. There has not been a major correction in the last 50 years or more that has not been preceded by a Hindenburg. That's not to say that small corrections can't occur with a HINDY and that small corrections can occur without a HINDY. But if you start to see a series of Hindenburgs firing, you have to be afraid. We had one fire on Thursday on the NYSE. That is the traditional index that we look for. Because of the number of interest-bearing and bond funds in the NYSE, I also run it on the Russell 3000, and you could see we had one fire Wednesday and Thursday. To me, a Hindenburg is a sign where the professionals are selling, the amateurs are buying, there's new highs, there's new lows, there's lots of volume and lots of volatility, and that's what occurs at a top. We don't see it often. Here is the math that goes into a Hindenburg omen. This is from my mentor, and may rest in peace, Ian Woodward. Here is some data that Ian did, and this doesn't include the last major correction, which was another big long, but you could see the number of signals in a cluster the percent decline in the Dow, and how long it took to bottom. Yes, some of these are very quick, but you've had some very major corrections occur after a number of signals in a cluster. Here was one in 98 where you had a single signal. So about a quarter of the signals have significant corrections. The more they cluster, the more concerning I am. Here is 2006, 2007. You had a series of Hindenburg's paint in 2006. Now I just have a little red mark at the top of my charts. And you can see here in 2006 that there was an 11% drop. In early to mid 2007, we had a big warning here, and we had a 14% drop. Now, those that weren't trading there that think 2007 were a bad year, well, frankly, 2007 started down here, had a big move up, a pretty substantial correction, and then it came all the way back up to set a new high. And I guess there's a bunch of head and shoulders in there if you look for them. Now, notice the number of Hindenburg omens that fired. This isn't a single omen. And then we had the black swan event. So when I start to see one or two, I pay attention. I'm just going to start to tighten my belt if we pull back into the moving averages. So the Hindis are firing. Now, market tone, I don't know, I'm a little bit bothered here. Typically, I reverse a bear market, or red, or here's the Woody indicator in this column. Red is bearish, green is bullish, and the yellow is chop. Typically, I reverse a bearish conditions in the market by having a couple of big volume or big move days to the upside called kahunas. Here's two kahunas in a row, and we entered a nice bullish market. Here was 1, 2, 3 kahunas that occurred, which pretty much ended the chop zone, but we really haven't gone all green. In fact, utilities are still red. Excuse me. Small stocks are still red. Let me get this back. Here is, let me revise that. There's no red on the indexes, but we're not all green as we were up where my arrow point is here or up there. So it's not a big move despite the 3 rows of kahunas. On the sectors, utilities are red. Interestingly, energy, which is right here, actually turned yellow on Friday. As I said, there was clearly some movement up on energy stocks despite continued weakening in oil. We use a number of large stocks. We call the Canaries. Apple, Facebook, Google, Amazon, Netflix, Priceline, and Baidu to give us a clue as to what the market might do. And as you could see, they pulled back a little bit Wednesday and Thursday and moved up on Friday. A lot of narrow range bars there, whatever that means on an index, fake index, just like fake news. But clearly that's very bullish looking. You notice up here, here is the Hindenburg painting on a chart. So if I start to see several of these at the same time, I will know that the market is in trouble. Now, this comes from Yardeni.com, and it looks at a comparison of margin debt in red and the S&P 500. And one thing you notice is after margin debt for a cycle peaks, the S&P sells off. This is 2000, this is 2007, and we're at a big peak in margin debt right now. And this, I think, was run middle of the week last week. So I think margin debt can continue to go higher, as you could see here. But if margin debt starts to turn down and shows that it's peaked, look for the markets to fall. So beware margin peaks in margin debt. Know your news and earnings. Earnings will be slowing down this week, but boy, there's some biggies. In fact, Tuesday, Nvidia, Priceline, and Disney. We've got big box stores, Macy's and Nordstrom and J.C. Penney's end of the week. And then based upon your own holdings, some of those might be pretty important as well. From a news perspective, here's a list of the news. As I look at that, perhaps the most concerning is the number of Fed speaks. On Tuesday, we got some Red Book and Jolts. Wednesday, We have some mortgage applications and petroleum status. On Thursday, we got our jobless claims and consumer comfort. And then on Friday, consumer CPI, retail sales, and more consumer sentiments. And then Friday afternoon, how many more rigs were added. So significant amount of news, but I think the big news is the French elections, which by the time the market opens up Monday, we should see the response. I really do think that the market believes that Macron, not Le Pen will win, but some of that's probably already baked in. So if Le Pen upsets, the market's probably going to roll for a while. Market thoughts. Boy, I had a lot of them this time. Market moves higher led by the NASDAQ. Divergence in Russell will result upside or lead market down to be determined. Hindi on the NYSE and R3000 does throw some caution to the wind, yet, oh yeah, I'll show you in a bit, the commitment to trader is strong, AD lines are strong, Woody indicators are mostly green. Energy is stirring off the bottom. I already said to be concerned about big cap biotech. Although the IBB looks okay, some of those stocks look weak. Feels like we're heading to one last leg up before summer. A moderate win in France seems baked in, but could we see another upset, i.e. Brexit and Trump, that is not priced in and leads the market to the downside? I'm fully invested, but I've tightened stops and be nimble as this feels a bit like a blow off top, especially the NASDAQ 100 generals. And these don't end softly, quietly, or with a lot of comfort. So things could go sour quickly. And oh yeah, what happened this year to sell in May? So we continue to climb the wall of worries. That should be an S or a Y. So I'm going to put an S in there. Make it a Y. Spelling was not my forte since they put me in med school, not law school. So I don't embarrass myself. So France elections, Trump, gridlock's good for the market, rising margin debt, Hindi, lots of things to keep us worrying. Usual agenda. Let's go look at charts. Start going to TradeStation very quickly and just review my 5-point, which I've already done for the day, but I'll just show you what I do. I look at 5 different things on each index, and I look at 3 time frames. This just gives me a tenor of the market. I look at, are we in a buy signal or a sell signal from John Person? Am I green, blue, or red? Green means I'm free to be long or hold. Red means I should not be long. I could be short or hold. And blue means I can do pretty much what I want. I look at the red dots above or green dots below that show concern about divergence in the MACD. Fourth, I look at where am I at within my envelope. If I'm above or below, I know I'm going to come back in. And lastly, I look at the high jump bar to see if I'm getting extended. So E-minis are in a buy in green. It does have MACD divergence at 68%. That's nothing. Above 90, I get concerned. Weekly's in a green and a buy, and monthly is in a green and a buy. E-minis continue to look strong. As I mentioned, some of the best strength has been in the NASDAQ. Interestingly, the last couple of days, NASDAQ turned blue, but still in a long signal. There had some divergences here that worked over pretty much. We're at the top of the channel there. We're at 96%. When I'm above 90 or 95, I expect the markets to sell off or at best case go sideways. This is an extended market on the NASDAQ. Not a big shocker. This has been leading the market higher. And you could see we got MACD divergence on the NASDAQ on the weekly. Monthly looks fine. Everything is green and in buy signals. The Dow, we've showed you that it wasn't as strong necessarily as, I don't like that, 60 minutes. We can change it to Dow. So let's look at the Dow. And you could see it did have a new buy signal on Friday. It's blue, buy signal in a buy, but blue on the monthly. Only at 56, everything else looks good. So the Dow with a fresh buy signal. And the Russell, which I said has actually been moving after being the weakest, is still in a sell signal on the daily. But it did have a blue, close to a high closed doji, if not a high closed doji. Green in a buy and blue in a buy in the monthly. So the only thing here that's at all week is the daily Russell, and it looks to me like it's close to get a buy signal. Let's look at the dollar. These green dots are bullish divergence. And what does that mean? It means that you've got a lower low on the dollar here on the dollar, yet you have a higher low on the MACD, and even though the dollar is getting lower, the MACD is actually getting less negative. So that goes along with a dollar that perhaps is getting ready to reverse. But right now the dollar is red and a sell signal, weekly and monthly and sell signals, and the bongo daily and weekly are negative on the dollar. If we look at oil, I said oil was weak last week until Friday. Notice we've got some of that divergence is popping in on the oil. Still in a sell signal in all three time frames, and it's pretty low on the high jump bar. Maybe this is the week that oil goes up. And then you would think that gold would be off the charts with the weak dollar, and that's clearly not what's happening. So is there so little risk in this market that no one cares about gold? Is I have to buy it because it's down? You know, look at where it was at the end of 16. We're pretty far off the lows on gold, and so I don't feel the need to do anything with gold right now. But I will point out that we are getting at the bottom of the envelope, and when we're at the bottom of the envelope, it typically bounces. So here's gold, and silver looks similar. So let's just take a quick look at the VIX. And you can see the VIX is in a sell signal on three time frames. Although it is blue, it did get below the envelope and got back in. And the bongos are all negative on the VIX. So if you want to be long, I just showed you a lot of reasons to be long. Let's go into the rest of the programs. Let's look at HGSI. Let's go down to Woodward Brown Group's full. For those who watch what I do here, there's nothing in HGSI that's not freely exchanged. In fact, most of what I show you will come for when you download, but if there's anything you ever see that I do, odds are it's in the program, and if not, I'm happy to share it with you. So let's look at, right now, we're looking at top down, which is all price and volume, but heavily weighted to Friday. Sort by raw combo, and you know the market's strong when mid caps, NYSE, small caps, NASDAQ, transport, industrials, S&P 15, S&P 500 are all at the top, and gold, bonds, dollar are at the bottom. Now, interestingly, semiconductors, although they were up 0.4% on Friday, are near the bottom as they lagged a little bit, and you saw the NASDAQ the last 3 days went blue. Let's quickly look at some of these. All right, let's just go into a simple view. So, a couple of things to point out. I always use the same moving averages, a 8-day exponential, followed by a 17 and a 50 simple and a 200. As I mentioned, you've got the 17 crossing over the 15. I guess that's not the golden cross, that would be the 50 and the 200, but that's a bullish sign. We had a little base. It looks like we want to break out from that base, very bullish appearing. We are, let's see, we closed above prior closing highs. That's a bullish thing to see. But notice on Thursday we did have the Hindenburg. Our bongos are both green. These are kahunas, which are bullish or exuberant moves on an instrument, a big move in a single day. Blue is good, red is bad. And this here is a Eureka, which is a market turnaround day. And you could see that, just to give you an idea of how much this market has moved since we changed, from when we realized it was going to be Donald and it's not a Hillary, the market has had a move of 15% in 124 days. So it's probably about 5 months of trading. So despite everybody telling us how bad the market would do if Trump won, the market's done pretty darn good. So we got 15% on the S&P. Looks like it wants to go higher. If we look at the NASDAQ, do the same analysis. low to the close. 21% move. That's a pretty significant move. If I just look at this last move from the low here to the high, we've had a 5% move in 15. That's a very big move. And again, I don't know when it turns into a melt up, but it sort of feels kind of melt uppy here, especially on Friday, although it did stall midweek. If I go down and I look at the Dow Jones Industrial Average, a little different picture, isn't it? It's barely above its 50. The 17's about to cross the 50. But it too had a nice move up day on Friday, enough to turn the bongos green. And again, the Hindi is going to be on all these charts because that's calculated on the NYSE. And then lastly, if we take a look at the Russell, which we talked about had been the weakest, but had a big move up here, pulled back to the 17 and held. Notice that it's still got a bongo red, so it's still technically in a downtrend. So the strongest index, clearly the NASDAQ, but the S&P and Dow look pretty good too. We look at the dollar, just to give you how I like to look at it. Notice the bongos are red. It's fell below the 200. Often the 200 can be support on the way down and resistant on the way up. It's going to have to prove itself by breaking above the 200 before I'm a believer in the dollar. Right now, I think that dollar looks pretty darn weak. If I look at the VIX here, now I know there's a lot of repetition here, and not everybody uses the same tools. That's why I use different tools. I actually do this every night, and I get it done extremely quick when I do it without having to talk to anybody. So although it looks like I do a lot of work, it's actually quite easy for me. And I'm not really that smart. I just know how to use the tools. So we're down about as low as we get on the VIX. And when you're down about as low as you get, you probably start to go up. But the VIX, the bongo is red. And for now, the VIX is quiet. When the VIX rises, my stocks will fall. When the VIX falls, my stocks go up. Right now, the VIX doesn't look like it's doing much of anything. Gold and silver, disappointingly, you might think that gold should be up with the weak dollar. And we'll look at both the miners and gold itself. Here's the gold. Broke down below its moving averages right now. The bongo went red. Hard for me to be long gold when the bongo's red. If I look at gold miners, a little bit higher on the list, but they too had a nice day on Friday, but they're below all the moving averages. And the 17 is crossing below the 50. And if we look at silver, they'll look a lot like the miners. Big pullback on silver. So with a weak dollar, silver lost 12% in about 3 trading weeks. I mean, eventually it's so oversold, it's time to go long silver, but that is ugly. No way about it. And again, it's got the bongos in a sell signal as well. And oil, whoops, I hate that sound. Cool, came back. Oil, you can get an idea of how much oil has pulled back as well. And oil bounced on Friday. Next thing I like to do is go down to 07, get an idea of where the strength in the market is. Now this is kind of funny because I told you I think biotech's questionable. This is looking at price change times volume. It's looking at the way that force works is I take today's change in price times volume. If I'm an up day, that's a positive number. If I'm a down day, it's a negative number. I plot that daily, and then I look at the 2 and the 13-day exponential. I look at the 2-day exponential moving average of force as my momentum indicator to show me what's moving. So, although I'm concerned about biotech, and I'll show you why, biotech came to the top on momentum, exploration of oil. So this is a very short term, not intermediate term, short term. Semiconductors, oil, gas services, communication. That's a big change. Semiconductors are still up at the top. Notice 69 groups have momentum to the upside. Over a 5-day range, biotech still up there. So what am I talking about? We'll look at that in a minute. Semiconductors move back up. If I look at 2-day force down, I've only got 7 down. That includes some consumer finance and some insurance industry, electronic components and healthcare services. Healthcare services getting moved around, I think, a lot because of the repeal of Obamacare. And the 5-day to the downside is 37. So we got more groups to the upside in both the 2-day and the 5-day. I then like to go through the top 10 and just take a look at what's there and look at their charts. If I right-click Biotech, change to Index Group, first thing you notice is I only got 2 groups that are actually above the moving average. And if you look at this, I got 2 groups, 2 stocks that had big moves. Immunomedics' big move was because the CEO quit. So let's play around a bit here. Let's drop it into my webinar chart. And there's a lot of things I look for here. I look at my bongos. The weekly bongo tells me I'm in a downtrend. The daily bongo shows I have a retracement because it's green. My Hindenburg shows there. I'm distributing. Both my forces turned positive. Big up day on Friday did that. I had a Bible gap up in Morales and Catcher language, a squeeze and a mobile breakout, and a kahuna. This gray thing is my index. So, I don't like the doji after a Bible gap up. Will that turn out to be an island reversal? I don't know. It doesn't make money. News on a change of the CEO. It worked for Amgen. It's worked for a few companies. I don't usually chase that. I look at the next one. Regeneron had a bunch of upgrades. They've got a great pipeline. You could see they actually have earnings per share growth. If I stick it on a weekly chart, whoops, sorry about that, wrong button. You could see that it's been sideways for quite some time and multiple kahunas on the weekly chart. Everything's green on the weekly chart. And Regeneron was one of the stronger looking patterns that I saw. Obviously, it's had a big move already. You probably missed it. Why am I concerned about biotech? Celgene. You want to go long that stock right now? It had a PSA reversal, mobile breakout from a squeeze to the downside. Everything turned red and a kahuna to the downside. Yes, it could reverse quickly, but it looks horrible. Biogen IDEC. Ditto. Vertex. Certainly off of its highs, and maybe it rebounds quickly. But again, the same thing, a mobile breakdown, PSAR reversal, and failing at the moving average. That's a 12-point drop, not a big drop, about 10% correction just to pull back into the 50. How about Alexion? This one's a little bit better, but when you look at Alexion over the long term, this was a stock to own for, let's go to monthly. And you can see what Alexion did and peaked back here in 2015 up over 200. And if we look at it now, it's struggling at its moving averages, not as bad as the others. It's still above the 200, but it's been in a long-term downtrend, and you've got the 200 above the 50, so it's got a death cross. Hard to get excited about this one either. And then the ultimate, Gilead. This used to be a great stock. Problem is you can't rely on your existing portfolio when you have competition, and you could see back here, when it broke down below the 50, that 50 became, which was support on the way up, has been resistance on the way down. And that's on the weekly, so that's the 200 or so daily. And you can see this is just not a stock that you want to be long. So if you look at IBB, at best sideways. And if you look at LABU, that's how I usually play these, has broken down. LABD, which is the short, doesn't show much here, but it was actually up 2% on Friday. So I'm worried about biotech, despite the fact that Immunomedics and Regeneron drove them up to the top. Exploration and production, is this a one-day wonder or not? Several of these look interesting. This would be on the exploration alone, Parsley Energy. Now this is typical Kahuna, pocket pivot. Industry group turned up a little bit, but it's been in a long-term weekly bongo and a downtrend. So these would be counter-trend rallies until proven otherwise. This is Parsley Energy, California Resources, Occidental Petroleum, Chesapeake. So they all had a big bump on Friday, but they still, to me, look pretty darn weak. So that doesn't make me feel warm and fuzzy. Semiconductors. Notice I only have a few above and many below. So let's take a, these have been strong, but the last couple of days had weakened. Here's OLED, a big Bible gap up on earnings. If you owned it, great. If not, it's probably too late. AAOI, probably not too late. This one has had a Bible gap up and a mobile breakout off the 50. Actually pulled back to the 50 and closed higher on the day. Kahuna, this one looks great and is on my watch list. Look at the earnings per share growth the next 2 quarters versus a PE. Here's another stock that had a wild day on earnings. Open low, closed up big, mobile breakout, big volume. Everything looks green. Good earnings per share growth as well, but look at the multiple. It's a little bit bizarre. Broadcom, this is one that I own. Is it ready to move? It had a pocket pivot. Everything has turned green. Good earnings per share growth versus the earnings. Micron kind of flat, needs some energy to come in. I'll be watching that. So certainly semiconductors as a group look better than the first two. Oil, gas, services, this was kind of surprising to me, considering the weakness in oil, but maybe things are different now. Rig, certainly in a deep sell-off. Big day, nice day on Friday, but it's a one-day wonder so far. Ditto. Schlumberger, ditto. Is this the reversal I'm waiting for? Maybe. I'll give it a big maybe. But I think I'm going to give it a little, at least 1 or 2 more days before I go chasing. Halliburton. All these look exactly the same, so you've had a big reversal. But is that really a reversal? Or is it like this reversal that it rolled over, or this reversal that rolled over, or this reversal all that ran up, failed, and rolled over? Don't know yet, so we'll be watching that closely, but it's deep in the hole below the moving averages. All right, what's next? Communications equipment. These have been big leaders of late. Apple, tight, lower left, upper right, breaking out to all-time highs. Everything is green on the above. What's not to love? It's expensive. It's got a big phone coming up. I think this is the quarter we just had. I hope that's the quarter we just had, and this is the next quarter. Pays a small dividend, tons of cash, even missing some of its metrics. It was great to have, if you could have sold your puts right away in the morning, you actually made money if you went had some puts on it into earnings, and then it closed up on the week. I actually got lucky on it. I have a long position. I protected it with some puts. I sold puts probably when the market opened, made money on the puts, and the long position went higher for the week. So Apple looks great. Arista Network looks a lot like Apple's chart, but even better. Look how tight this one is. It wants to run again. Still has good earnings, and its multiple is high, but it's not sky high. Sierra Wireless, it had a Bible gap up, mobile breakup from a squeeze, and a kahuna on Friday. Everything turned green except for distribution, accumulation distribution. I don't know. It was down below the 50 when this happened. I'm going to watch it. It's got some earnings per share growth. We'll see where this goes. This was on earnings on Friday. Don't know this guy. Lots of volume, a little bit loose. I like those tighter patterns. All right, nothing else there that stimulates me. Back. Number 6, infrastructure software. A lot of the antiviral things are in here. So FireEye usually only moves when there's talk of a takeover, but look at the group strength here. Probably the strongest group strength I've showed you. Had a Bible gap up on Wednesday, continue to go higher Thursday and Friday. Everything is green. Don't like the earnings per share. Earnings are out, like the chart a lot. Log me in, pause for a long time. If you go into the weekly, you can see a big run up and a sideways. And that's because there was a transaction in which it wasn't a takeover, but it was an exchange of some assets, I believe. And logged me in, nice pattern, Bible gap up. Looks like a Bible gap up, although I guess didn't qualify on Friday, maybe on volume, 1.4 million. Don't know why. Oh, the volume was quite light. That's kind of why. Is that what it is? Let me see. Volume average. No, it had good volume. I'm surprised it didn't get a Bible gap up on Friday. But also a doji. And again, are we setting up for a lot of island reversals? I think I'd like to see what it looks like the first day or two. Palo City, PCTY. Earnings are not anything to write home about. Earnings did come out on Friday. Big move up with a Bible gap up in a kahuna. Let's see what this looks like on a weekly chart. You know, this looks buyable to me. It's going to be on my buy watch list. Let me make sure I put it on. One of the beautiful things about HGSI is how easy it is to keep track of things. All right. ServiceNow. This is another one that I thought looked interesting. All-time high, or certainly all-time on this chart high. That's a weekly. And on the daily as well. Lots of pocket pivots. Everything is green. So if you're looking for a place where there's some interesting looking stocks, here's another group, infrastructure software. So just reviewing, I liked some of the semiconductors and the infrastructure software. A couple of the communication equipments look good as well. Internet-based services. Zillow up on earnings. You can see Zillow's now at an all-time high, taking out its 2016 highs. Everything looks green on the weekly. And on the daily, everything looks good. Doesn't show a lot of earnings. Strong looking stock, probably too far for my taste. Shopify, what a beautiful tight lower left, upper right pattern. It's pretty extended, doesn't make any money. Notice the high jump bar here, which I can talk about at another time, is riding the upper limit. That is not a good sign for me. Usually when I see that, the stock is extended and ripe for a pullback. More Zillow. All right. This is how I do top down. I go through these one at a time. Exact Sciences, they make a pill that has basically, not a pill, they take a stool sample and they look for cancer DNA in your stool. And in some people who, for reasons medically or others that they can't get a colonoscopy, can help to detect colon cancer early. They keep getting more and more coverage. I don't know where this stock is going to go to, but it had a big move up on this week, a Bible gap up here, and it continued to move higher. Mettler Toledo, Medical Services. I don't buy this. This is looks like a shooting star. I'd have to see where it ends up. Thermoscience Fisher looks like the other with a Bible gap up and a move higher. Something about these device stocks, a lot of them had a tax in ACA, and that tax probably goes away with the repeal, and that's probably caused several of these to move higher. Next group down, IT services. I like the second one. Cognizant Technology, CTSH. Sideways, nice move up this week. Everything's green on a kahuna. Earnings came out Friday, which drove that. Bazone, earnings are in a couple of weeks. Sideways move, big move on Friday. Probably driven by Cognizant's numbers. That looks very bullish. It's got great earnings per share growth, but a high PE, a little bit over 500,000 shares a day. And Accenture doesn't look as good. So I like that Bazone, as I mentioned. And then integrated oils. Look at a couple of these. These kind of look interesting. Here's Royal Dutch Shell. A couple of things I like about this. You had a pullback sitting on the 50, had pocket pivot kahuna. Everything turned green. It pays a 5.9% dividend. We got Petrobras. And Brazil is looking interesting as well. Sort of a high closed doji, a PSA reversal, not quite as good. It's still below the moving averages. No dividend. BP, this is the one I liked, sitting right on the 200. Kahuna, pocket pivot, mobile breakout from a squeeze, everything green except distribution. Look at the earnings per share growth coming in. Earnings are out. It pays a 6.7% dividend. So it's interesting that despite Total gapped up on Friday, earnings are out, 4.1% dividend. So what is this telling us? Here's Shell, a 6.7% dividend. Despite the fact, I don't want to do that, that oil's weak, when I go back, and hold on a second, and I look at my list of indexes, despite oil being weak, I've got number 2, number 4, number 10, and then number 26 are energy. So 4 of the top 26 industry groups are energy. I think something's going on there. Yes, biotech's number 1. I showed you why I'm concerned about biotech. I know it's getting late. I went through about 600 charts today, ended up with my list of stocks that I thought were interesting. Here's some of them right now. See if there's anything I can comment on. First, I'd like to go over here to industry group. Anything that looks like I got bunches of. I've got a couple of exploration stocks. So these are the 3 that made my list. They look a lot like the one I showed you. Cimarex, this has been a big guy in the past. This is kind of an area that it's reversed before. Big reversal day on Friday. A Kahuna mobile breakout from a squeeze. Yes, it's still in a downtrend, so I have to watch carefully. Look at the earnings per share coming in. A little bit of a dividend. My concern on this one is it's got a 200-day moving average about $10 away, but this is a stock that's been on my list that I like to watch. Diamondback Energy. Again, I'd rather buy it above 102 than buy it at 99 because I like to see it clear the 50. But this has been another one that I've been impressed with for a long time, and it just got back above the 200. And then the other one I liked was Rice, a shale play in Pennsylvania, I believe. Look at the first thing is look at how over the last 2 years it's more than doubled revenue. How it makes money with high earnings per share growth, doesn't pay a dividend. Again, I'd like to see it above the 200-day moving average. Before it's something I was willing to jump into, but those 3 made it to my list. On biotech, the one that made it to my list, and I don't consider this a biotech, this is a biofuels stock, and then I'll go look at the biotech. Sideways broke above the 200. The reason why GPRE made my list, let's see if I go back here. GPRE, look at it a couple different ways. This is a high closed doji, OBV breaking above moving average. This shows me it had a mobile breakout and a pocket pivot, a PSAI reversal, and a Kahuna on the weekly. On the daily, also had a high closed doji and a new buy signal this week. All bongos are bullish. And if I look here at my OVI fill, I can see such a strong OVI on this move here as well. So I look at GPRE as an interesting stock, and that's why it made my watch list. And then the one biotech I picked was Aratana. And again, it doesn't look like much here, but when I put it on my, went against my person signals, I thought I had it in here, Aratana. Let me see, A-R-T-A. That's not what it was. Let me go back here and look at it. I was trying to remember why I picked it. Now, I like the move off the bottom, that's for sure. I like the fact that everything turned green, but there's another reason why I like this stock, and now I'm trying to figure out what it was. Let's look at the weekly. It's a high close doji, I suspect. It's PETX. All right, it is on my list here. Notice it has a high close doji, so it's been in a downtrend, had a high close doji on the weekly. It's in a weekly buy. OBV is strong. Histogram flipped to positive on the daily. It's already in a daily buy. OBV also strong. There's a lot of things that I like to see, so it makes it to my watch list. There's the integrated oils that we looked at. Some of the service companies I thought were interesting. Here's what FTI has always been a company that I've liked a lot. This is a stock that's pulled back like the other services stocks. It makes money, has growth greater than the PE. And you know, I showed you a bunch of them earlier, and they were struggling, and they were further down in their pattern. If oil goes up, this is one of the service stocks that I think could be a leader. Interestingly, some of the insurance companies, although as a group they were weak, here is AGO. Pays a 1.5% dividend. It broke above the 200, had a PSA reversal, mobile breakout from a squeeze. The problem with it is it's a weekly bongo is down. Progressive, looks like it's breaking out here. Everything is green, makes money, 1.7% dividend. I picked that as well. And a number of semiconductor stocks that we looked at already as well. So on that now, I'll show you this one also looked interesting to me. MIC. And why did this look interesting to me? Sideways in a squeeze now for over a month. Had a pocket pivot, a kahuna, a mobile breakout. Everything turned green. Great earnings per share growth, 6.4% dividend. And I think it looked good in here as well. Let's see. Maybe not. I can't remember what this looked like. Yeah, so it's in a long-term uptrend on the weekly. I had a high close doji and a new buy signal on Friday on the daily, coming off of a squeeze. All the bongos look good. I thought this one looked interesting as well. And again, I pointed out the 6.4% dividend. So I've gone through a lot. I think there are a lot of good-looking charts. A lot of them are extended. I think there still is risk in the market. And where's all the action at? Let's just quickly look at the Canaries one at a time. We already looked at Apple. Apple looks beautiful. Apple wants to go higher. It's at an all-time high. That new iPhone coming out this fall, which I can't wait to get, and I'm probably not the only one, is probably a major driver of the, even though its numbers on its metrics were not all great. Priceline earnings are out this week, so be aware. All-time highs. People had a target of 2,000. You're at 19 and 03. You got up to 1922. That would be a target, I would think, for many people on Priceline. I don't usually play it until around earnings, and I may put in a trade at that time. Tesla. I love my Tesla. I don't own the stock, and I think the stock is overpriced here by any metric I could come up with. Yet it keeps going higher, and I guess I should own it. But I got a Model X. I got an Aston Martin, which I showed a picture of once. I drive my X all the time. It's such a fun car to drive. They really did a great job. Stock, a little bit of chop. And we turn off my filter, so I can show you the rest of them. One thing with HGSI, if you don't see what you think is supposed to be there, probably got a filter on. Google, here's Alphabet, all-time highs. What a great stock. Even Warren Buffett said he missed this one. Earnings are out already. No gap up was on earnings. Amazon doesn't do justice on the daily chart. Here's a weekly chart. This down here is at about 300, and that would have been in the beginning of 2015. And here we are 2 years and 3 months later, and we're over 900. Closed at 934. What a great move. It's been a relatively orderly move. It gets pullbacks to the 50 frequently. We haven't had one in quite some time. Boy, if you could buy it in the 810, 820, 830 range, you'd be very lucky. I don't know if it gets down there. We're in a little bit of a flag pattern here. One of the times that I find that OVI to be most helpful is in a flag to see if the big guys, the hedge funds, are still buying. And it looks at options, volume, volatility. When I see a flag and I see my OVI at the all-time high despite the pullback for a couple of days, I don't think this is a big correction. I think Amazon still looks good. That's why I'm long. Facebook, another one who had crappy earnings, at least some of the metrics. I'm concerned about slowing ad dollars. Fell down to the 8-day EMA, held, had a nice day Thursday, and Friday gave back most of that. You know, if I have a choice being long or short, I'm long, although I do think it can come back in a little bit. And Netflix, you know, again, had a reversal on Friday, but has been up a lot. Had a red candle high. Do I think it could come back in for a couple of days? Yeah, but it's certainly rather be long than short on Netflix. Price line we looked at, and Tesla. So there's some of the widely followed. On that note, it's time to go to bed. Y'all have a great weekend, and we'll talk to you next week. Be careful. Well, I'm not going to say what I hope happens in France because let them decide. Good night, everybody.